Welcome to Bloomberg ETF IQ. I'm Scarlett Fu.
And I'm Katie Greifeld. And Scarlett, it's been one whole week since the SEC approved spot Bitcoin ETFs.
Feels like one whole month, but we'll give you everyone an early progress report.
It really does. And on that note, let's get to the biggest stories right now in the more than $10 trillion global ETF industry. As we mentioned, spot Bitcoin ETFs, they're approved and they're here. We're going to speak to Rachel Aguirre of BlackRock about the firm's fund leading the flow race so far, IBIT.
But trading the funds may not come as easy for some. Vanguard has chosen not to support these products on its platform.
And we'll actually talk about something other than Bitcoin with Sylvia Jablonski of Defiance ETFs on its recently launched Israel Bond Fund. But before we get there, as always, Eric Balchunas from Bloomberg Intelligence here with us now, looking at the flows. Eric, what do you got?
Katie, Scarlett, thank you very much. Looking at the flows, we have some new entrants, some first time. It's very rare to see new launched ETFs make it to the 1 week leaderboard, but you can see there IBIT at number 4, FBTC at number 6. There's a couple more down the list, but let's go back to the regular stuff here, which is the stocks and bonds. IVV at the top, you love to see it. That's a good chunky flow for equities, and VU right there in the top 5. And then you've got LQD, corporate bonds. That's good. You know, the market, again, after last year's run, we were curious how it would hold up. Good so far. Let's look at the 1 week out. This is where it gets a little shaky at first glance, but it's not really what it seems. SPY's negative $5 billion. That's largely money coming out that went in December to do tax loss harvesting. So I'm not really counting that as sentiment. That said, money out of small caps, that's interesting. We thought that would be a big year. Also, SUSA, more ESG issues. That's a bomb out of an ESG ETF because they're not that big to begin with. And then GBTC, you see here, negative $1.1 billion, kind of offsetting some of those Bitcoin ETF flows as that converted into an ETF. So let's look at the leaderboard as we have it here. These are the top 5 Bitcoin ETFs by 3-day flows. So you can see here, iShares at number 1, kind of expected, followed by Fidelity. Those, I would have called those the 2 favorites. And then a real kind of interesting race between Bitwise and ARK for 3rd place, and then Invesco here. But these are really big numbers for 3 days. And these are really, really big numbers for 3 days. The volume has been extra interesting. But again, if you add up all the flows, it's only 800 million more than the GBTC outflows. So definitely some offsetting with GBTC, but overall positive, especially with those volume numbers. Those are incredible.
And we have the perfect guest to talk about it with, because joining our conversation now is Rachel Aguirre, head of US iShares product over at BlackRock. Rachel, it's great to have you with us. And Eric promised me lunch if I ask this question, so I'm going to start there. Are the flows coming into IBIT coming out of GBTC?
Well, first of all, thank you so much for having me. It's great to be here today. And, you know, we're really seeing flows come from a number of different directions. Clearly, you know, the interest we're seeing is both from retail, from self-directed investors, and there are some who were ready to invest on day one, but we're also focused on those investors who are just now beginning to look at this new asset class, and we're very excited about that.
So I think about how Gary Gensler was clearly holding his nose while approving the spot Bitcoin ETF filings. And of course, he gave various warnings about myriad risks. Do those do a disservice in any way to the funds that have launched? How do you think about that?
Not at all. They don't do a disservice at all. You know, we, of course, welcome the regulatory developments that we saw as it pertains to spot Bitcoin ETFs. But here's what we're doing. We are giving investors access to a new emerging asset class. And Bitcoin is not going to be for everyone. We know that. Our investors know that. And so we're really here to help support them with education as they begin their journeys in terms of Bitcoin adoption.
And Rachel, you know, I was tracking this obsessively, probably too obsessively, while we were waiting in the last month before approval. Your name was in a lot of the SEC meetings between BlackRock and the SEC. A lot of the issuers met with them. What were those meetings like? Was there ever any concern that this would not get across the goal line? And what did you think of all of the obsession coming from the outside?
Well, the obsession from the outside was quite interesting to observe. I'll tell you this was like no other product launch. I've been in the industry for 19 years now. I've never seen anything like this. Eric, I'm going to assume you've never seen anything like this either. There were 11 spot Bitcoin ETFs that were approved on that day by the SEC. So we've never seen this before. Very unique. It did not follow a straight path, but I will tell you this, that is what innovation is. It doesn't follow a straight path. It involves risks. I mean, that's something that I live and breathe every day. So for me personally, it was incredibly exciting. We love innovation, and ETFs have been and will continue to be on the leading edge of innovation.
And for what it's worth, I've also never seen anything like this. Obviously, haven't been involved with the industry for as long as you and Eric, but Eric brought up the meetings with the SEC. I read a lot of those meeting memos that came out of it, and for a while, there was a lot of conversation, a lot of focus on cash versus in-kind. I mean, reading the tea leaves, it seemed like issuers such as yourself were pushing for in-kind. Of course, ultimately, we ended up with cash redemptions. Do you anticipate, though, that this will move to an in-kind redemption structure, maybe once the dust settles, so to speak?
Well, I'll say a few things here. First of all, in terms of getting this across the line, it was investor demand, ultimately, that got this across the line. That pivot towards a cash operating model, I do believe, was an important milestone along the way as well, though, as you point out. In terms of the operating model itself, this is what I'll say. It was actually quite easy for us. We have dozens of ETFs around the globe that leverage some form of a cash operating model. When you think about emerging markets, for example, there are certain emerging markets that just don't have the possibility of in-kind. So we're very familiar with cash operating models. What was new here was the concept and the aspect of storage. And so in terms of the operating model itself, we take in cash, we invest it in Bitcoin, and then on a nightly basis, we sweep that Bitcoin into secure cold storage.
So I got to ask you, Rachel, about fees, because what we've noticed, of course, in the lead up to the actual approval and launch of these ETFs was that there was a fee war very early on, 2 rounds of fee reductions. Right now, IBIT has an expense ratio of 12 basis points. Fees clearly matter until they don't. SPY, for instance, shows that investors are willing to pay for liquidity, for tight spreads, and for high volume. How are you thinking about what would prompt another round of reductions, or whether there's a need for another round of fee reductions?
Well, you're exactly right to say that investors are thinking about more than just simply fees. More than anything, they're going to look at the performance of the product. How well does it track? They're going to look at the market quality of the product. This is incredibly important. You talk about liquidity. Liquidity matters. Tight spreads matter. IBIT is trading a penny wide right now. So in terms of the market quality, IBIT is there 100%. And so liquidity and market quality are going to continue to matter. At the end of the day, what investors are looking for is value. And value is more than just fees. It's quality at a low cost. And so that's what we're focused on delivering to investors with IBIT.
And Rachel, for a new ETF to really get going, you like to see some volume and low fees. Those are really 2 important building blocks. IBIT already has both. So we don't really need to, now we look at the marketing. How do you get advisors who tend to be older, with older investors, how do you get them to sort of get interest in this? I'm really curious as to your efforts. I saw Jay Jacobs' video. That was interesting. We've seen Larry Fink on TV talking about it. You have your models. What is your game plan to get those flows going in IBIT?
Well, look, as I mentioned, day one interest has certainly been, primarily focused in the retail channel. We've seen a lot of self-directed investors interested and ready to make investments on day one. But I will say it's not just that. The wealth community, the advisory community is incredibly important here. But that's not about day one. That's about the weeks, the months, and the years to come. Although I will tell you an interesting story. We did have a financial advisor call us up on day one, wanting to add IBIT to all of their models at a 2% allocation. So I will say that different advisors are in different parts of their journey. We have to remind ourselves, this is a new asset class. And so we're focused on the education. We're focused on supporting our clients through their own investing journey as they consider what are very unique return and risk characteristics of Bitcoin. I will say this again, Bitcoin is not for everyone. Some will choose to make an allocation and others will not.
And Rachel, you said model portfolios, and my ears perked up because that's one of the big questions when it comes to BlackRock's models. Is there going to be an allocation to Bitcoin in the weeks and months ahead?
Well, clearly, I can't comment on that. But what I will say is we're focused on, again, for our clients, understanding what education needs there are, supporting them along their investing journey, and empowering them to make the financial decisions that are right for them.
All right, Rachel Aguirre of BlackRock, thank you so much for joining us to talk about iBid and how the first week of trading has been. We do have some breaking news here on Bayer, the German pharmaceutical company, the German company overall. It is going to change its operating model, and it sees significant staff cuts. Bayer is offering employees severance agreements, and it will be announcing job cuts, a program that will end in 2025. But in the meantime, it cannot quantify the scope of the job cuts at this time. We'll continue to monitor these headlines for you. Bayer, of course, the German industrial company, anticipating job cuts. Coming up, spot Bitcoin ETFs may be approved, but investors are quickly finding out that it doesn't mean they're available everywhere they want. That's next. This is ETF IQ on Bloomberg.
Welcome back to Bloomberg ETF IQ. I'm Katie Greifeld. Time now for the ETF brief, where I walk you through the trends and the stories that caught my eye in the ETF industry. And we start with Bitcoin futures ETF, specifically the VanEck Bitcoin Strategy ETF. The ticker there is XBTF. Really, for the last few weeks, we've been questioning what the future of Bitcoin futures ETFs are after the spot products launch. And for this ETF, VanEck announced today that it is shutting down. It only accumulated about $50 million of assets in its lifetime, so not too big of a splash, and soon it will cease to exist. But let's move on and talk about something happier. ProShares filing for 5 Bitcoin-flavored ETFs just this week. The spaghetti cannon has been turned on. These are leveraged and inverse Bitcoin-based products. They're going to use derivatives to get that exposure, and one place you will not be able to buy them if they launch is Vanguard. Vanguard taking the position that spot Bitcoin ETFs will not be available for purchase on the Vanguard platform. Now, we knew that Vanguard wasn't going to launch spot Bitcoin ETFs, but the fact that they're not even allowing them to trade has surprised, it seems, a lot of people.
It surprised a lot of people, but maybe it doesn't surprise one person, and that is, of course, our own Eric Balchunas. He knows a thing or two about Vanguard, given that he wrote the definitive book on Vanguard founder Jack Bogle called The Bogle Effect. So, Eric, this refusal to allow Bitcoin ETFs to trade on his platform, do you think it's temporary or permanent?
Look, I think down the road they're going to lighten up. I think for now this is just like just not in their DNA. It's almost like repellent to them. They generally don't like commodities in general, right? Mm-hmm. Bogle was real into stocks and bonds because that money works for you, right? It's about dividends and earnings growth or a coupon. A commodity is just what somebody else will pay for it. Now, they do have GLD trade available, but that's a commodity that, quote unquote, has usage. So they just see this as a commodity and no usage. So it's like a double whammy for Vanguard. And you have to understand that Vanguard's like the family-friendly kind of brokerage platform. They don't allow VIX products or none of the fun stuff, no leverage products. The metaphor I use for this is if you're old enough, you remember in the late 80s, Walmart would not carry certain rap albums like Two Live Crew. Okay. And it actually created buzz and intrigue in the albums. It did nothing to Walmart. Like shoppers were going there for other things, cheap goods. They didn't care. Yeah. But it actually helped the album. This has kept the story going, I think. This has given the story more legs. So the crypto Twitter that's freaking out, I'm like, it's not that bad of a thing. And nobody who goes on Vanguard really wants Bitcoin anyway. It's not your audience.
Yeah, Scarlett, I don't know how much time you spend on crypto Twitter, but hashtag boycott Vanguard has been a hot topic over the past week. So you mentioned that Bogle didn't like commodities, wasn't a big fan, but he had some very choice words when it came to Bitcoin.
Yeah, in one of our interviews, I asked him, and his exact phrase was, avoid it like the plague. And then in Boglean fashion, he said, did I make myself clear? Right? And then he goes into the whole deal with how commodities have no intrinsic value, what is investing for, and that's just his take. Now, I will say, Bogle was a Puritan. I mean, I would bring up thematic ETFs, smart beta, basically anything outside of the total market fund.
And he'd just smack it down?
And he would smack it down. So like you're talking to the most purest of the pure, like the Yoda of investing, right? He just doesn't really, a lot of stuff is distraction to him. That said, not everybody is like him. I see this as serving a purpose in the hot sauce bucket of a portfolio. The 60-40 takes 30 years to really compound and give you the returns you're looking for in retirement, but it's boring. You can't touch it.
Yeah.
So people like to mess around. I think that's where this is going to fit, is a small allocation in that hot sauce bucket, even for some Vanguardian investors.
Well, you bring up a good point, which is that philosophically, Vanguard, Jack Bogle, is against these kinds of speculative investments. Having said that, he was not a fan of ETFs, the ETF wrapper, when those first came out either.
Absolutely. He did not like them. In fact, on the day the ETFs came out, they had dueling press releases. Bogle put his own out saying this is awful. Vanguard said, hey, look what we're doing. Anyway, it's a hilarious look at the gap between the two. But keep in mind, Vanguard is getting into the advisory business. That's their engine number 2, according to Tim Buckley. That is key because as an advisor, you have to have access to stuff that isn't just 60-40, like private equity, which they've gotten into. So I think people, if they demand it as an advisor client, Vanguard's going to eventually have to lighten up on this and just consider it an alt.
All right, well, it's going to be fascinating, very fun to watch this potential evolution. Eric, thank you so much. And still ahead, we're going to drill down into the Israel bond market with Sylvia Jablonski of Defiance ETFs next. This is ETF IQ on Bloomberg.
This is Bloomberg ETF IQ. I'm Scarlett Fu along with Katie Greifeld.
And it's time for today's drill down where we focus on one ETF. Eric, hit it.
Katie, today we have something non-Bitcoin, thank God. We all could use a break. All right, this is CHAI. This is the Defiance Israel Bond ETF. The first ever Israel Bond ETF, but it does also highlight the same thing the Bitcoin ETFs do, which is ETFs really go out there and bring home some exotic stuff. Here you have local Israel bonds. Click a button, you own the whole basket. You can see this thing just came out. It's only a month old. 48 bips, I think that's pretty reasonable. Assets are pretty minimal, but it's, again, a month old. Something like this would take a while to grow, probably. Let's look at the breakdown of the holdings. What are you getting here? So you can see it's mostly corporate bonds, government, about a quarter, and that's really it. That's the breakdown. The maturity is, pretty distributed all over the map here. And the credit rating, largely IG, a little bit of high yield in there. So again, a pretty wide basket. Let's look at the returns of this versus IAGG, which I thought was the best comparison for now, which is the international ag. Israel's a developed market now. And look, it's trailing it. It got hit hard. So the thing to notice about this isn't necessarily that it's down, it's only a month, but that it will swing around IAGG a lot. Look at the volatility. So, this is something probably for the outskirts of a portfolio. Probably going to need some returns to get some looks, but otherwise interesting first-time exposure to a new market.
Eric, thank you. And joining us now to talk about this ETF, we're joined by Sylvia Jablonski. She is CEO and CIO over at Defiance ETFs. Joining us on set. It's great to see you. And let's talk about timing here because CHAI launched on December 13th. Of course, you think back to October 7th when the initial Hamas attack occurred. Talk to us about that timing and why you chose to launch about 2 months after that.
Sure, and thank you so much for having me. So we actually filed for this ETF and worked on this ETF for, I'd say, the better part of this year.
Wow.
Like you said in the intro, Eric, it's actually difficult to get new types of products, new types of securities into an ETF wrapper that haven't existed before. So, the timing of the ETF was actually after a long road of planning and R&D to get it out there. In terms of, what's happened sort of since October 7th, there's been this massive increase in demand for exposure to Israel, whether it's Israel equities, whether it's bonds in Israel, and essentially billions of dollars have flown into the region. And so, there's no sort of tradable, transparent wrapper to trade this type of product for investors to hold it in an institutional account, be able to get in and out of it. And so this solves that problem.
So Eric mentioned that it has sovereign debt and corporate debt. What's the breakdown right now, or do you have a specific breakdown in mind?
Yeah, so it's limited to about 25% of government debt, and that's the diversification rule of ETFs, right? You sort of can't have more than that in one issuer. And then about 75% of it is corporate debt. So you're getting exposure to both those, solid government types of debt products as well as the corporations. And the corporations often, represent what is great about Israel, sort of the entrepreneurship, the growth in technology, the growth in R&D and innovation, and supports that infrastructure.
And let's talk about the currency. When I think of these emerging market or developed market single bond ETFs, I do think about the currency effect. What's that like? How much volatility can we expect?
So there could be volatility from foreign currencies. You know, you kind of can't predict that. But if you look historically at the shekel, super interesting. So the Israeli government is one of the most financially sound governments out there. You know, they have sort of the best debt to GDP ratio. They have to actually hold foreign currencies to reduce the value of the shekel because it keeps appreciating so much. So if anything, investors in this product, at least now, are getting the upside potential of the shekel with this exposure. And of note, Israel has actually never defaulted on any of their debt offerings before either. So there's stability with that too.
And Sylvia, let's zoom out a little bit from just this ETF, because when it comes to investing in EM, it feels like the concept of unbundling EM has become more of a theme in the past year, but it's pretty rare for there to be a single country ETF. Do you have any more in mind?
So what's super interesting about the Israel bond ETF is that these bonds trade on an exchange. So a lot of the products out there are OTC. These actually trade on the Tel Aviv Stock Exchange. And so we partnered with Migdal Capital Markets, their top asset manager in Israel, and Blue Star to create this index. But you know what we're doing is trading listed securities. So it's actually feasible to put this into an ETF wrapper. I think if we saw, and the amount of product or amount of offerings out there have to comply with ETF rules too. So if we find another country that kind of fits the scope and has enough offerings out there to put into a product and has a good yield, this annualized as of December 7th was 5.73%, we'll look at it.
We start off with Chai. I do want to end with Chai and get a sense from you on the demand from investors, particularly those who might have a personal tie to Israel into Chai. What has that looked like?
So, and actually, so it's high, and it means life in Hebrew. And so prior to October 7th, prior to the ETF, some of the largest institutions, endowments, pension plans, like famous multi-billionaires actually invest in these products, and they have sort of no ties to Israel. They like the stability. They like, again, the access to technology, entrepreneurship, and growth. And then there are others that obviously have kind of a personal tie to Israel, want to support the economy there, particularly with what's going on now. So I think those are all of the reasons why investors get into it. You have retail and you have the big institutions, and we think that putting this in an ETF wrapper now makes it far more accessible to trade.
Well, Sylvia, it's a fascinating fun. Glad we could have you on to talk about it. That is Sylvia Jablonski of Defiance ETFs. And a programming note, we'll be back next Monday, but starting next week, we're moving to a brand new time, 12 p.m. New York time. So Eric, make sure to set your watch, and our audience as well. And if you just can't get enough of ETFs, a reminder that you can listen to Eric and Joel Weber, just one, on Trillions. It's their podcast that covers the industry. But that does it for Bloomberg ETF IQ. I'm Katie Greifeld, along with Scarlett Fu and Eric Balchunas, and this is Bloomberg.